Monday, November 29th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how Wall Street is going to push ahead the so-called energy crunch, and mostly I would say in Europe. And by Wall Street, I mean the major international banks, the too big to fail banks that are not only based in New York, but also in the city of London. And actually, there are more American banks in the city of London than there are American banks in New York. That's the old saying. But before I look into that, I just wanted to say that if you're new to the channel, if you enjoy my channel and my videos, make sure that you subscribe. And if you like my videos, make sure you hit the like button. It helps. The other thing I would say, if you want to help the channel, there are ways to help, and it's all down in the description of every video. Thank you very much for all the existing supporters, all the existing viewers. Well, all the viewers are supporting the channel, of course. Thank you very much. Yeah, Billy and I have been for a walk this morning, as usual. It's very cold. There's a frost as well. It hasn't snowed, but for this time of the year, I would say it's very cold, and it's, I think, supposed to stay cold. So that's the other thing that we need to keep in mind. Even with all the news of the last few days that I probably don't have to tell you about, and despite the fact that there are fears of more lockdown, I still think the energy crunch will continue, especially for gas and electricity in the UK, on the continent of Europe as well. We're very dependent on gas, and by gas, I mean natural gas. Americans call petrol or gasoline, they call it gas. But this is natural gas. And many of you know that I worked as a futures and options broker in the City of London for 20 years. I worked for major banks. Actually, I can tell you who I worked for Citibank. And then Citibank sold the futures department to ABN AMRO. I worked there for about 7 years, and then I moved to Man Financial, which was a brokerage, futures brokerage, different setup than a bank. And then it became MF Global. Some of you might know about MF Global, but while I was at MF Global, my firm, not me personally, was working with some other firms, exchanges as well, to set up a carbon emissions contract, a futures contract. And I remember that well. That was around 2007, 2008. And I thought, this doesn't make sense. How can you trade carbon? But I think now we're seeing what that was all about. And that's what I want to cover today. And it's got a lot to do with this climate change push. And you will hear on the mainstream media, business channels, publications like the FT or the Wall Street Journal, that it's got nothing to do with the climate change push. But I would say there is. This limit on carbon has been pushed by the United Nations. And we know who's behind the United Nations, or we should know. Or you should know by now, hopefully. It's the bankers. If you don't believe me, just look at this picture here. It was J.D. Rockefeller III who presented a check in I think it was 1948, about $8.5 million, I think, at the time, to the Secretary General of the newly founded UN to build the headquarters in New York. So we know who's behind the United Nations. We know that the Rothschilds are also behind the environmentalist movement, according to George Hunt. Some of you have watched George Hunt's videos. I'll put one up in the cards if you want to watch it. The ICE exchange in London, Intercontinental Exchange, that was where they started trading carbon futures, and that's where it still is. Goldman Sachs was one of the original founders of that exchange, so that doesn't surprise us, does it? So there you go. Amazing but true. The bankers set the price of emitting carbon via a futures contract. What next? Oxygen entitlement futures. So you can see here the contract size, one lot of 1,000 EUAs. Each EUA being an entitlement to emit 1 ton of carbon dioxide equivalent gas. So you can see the top 10 holders there. Of course, we got Vanguard and BlackRock up there, and others. So as you can see, it's traded on the ICE exchange. So why is that so important for the price of natural gas? You can see carbon emission futures. They're going through the roof here. We are at all-time highs. What are the fundamentals? Well, the fundamentals, I think, is that the bankers, the central bankers, Wall Street, the City of London, the people who own the system, they want to move people away from fossil fuels. Is it really to save the planet, make things cleaner? I have my doubts. I think it's more about control and more about profits. So why does a more expensive carbon affect the price of natural gas? And we're going to look at the chart of natural gas in a minute, because natural gas is also a fossil fuel. But this is why, in my opinion, natural gas is going to continue to go higher, especially if these carbon emissions continue to go higher. And I've got here something from the U.S. Energy Information Administration. And I like to say these carbon emissions are not traded in the U.S., but U.S. banks in Europe, they can trade that. In America, there is, I think Congress hasn't passed or approved carbon trading, carbon emission trading. But it says here, natural gas, explaining natural gas in the environment. And I think this is the important part here, this first paragraph. And I think you understand why natural gas prices will probably keep going up in Europe quite a bit. It says, burning natural gas for energy results in fewer emissions of nearly all types of air pollutants and carbon dioxide, or CO2, then burning coal or petroleum products to produce an equal amount of energy. So here's why. About 117 pounds of carbon dioxide are produced per million British thermal units, or MMBTU, equivalent of natural gas, compared with more than 200 pounds of CO2 per MMBTU of coal, and more than 160 per MMBTU of distillate fuel oil. The clean burning properties of natural gas have contributed to increased natural gas use for electricity generation and as a transportation fuel for fleet vehicles in the United States and also in Europe for gas and electricity, right? For utilities. And that's why we're having the energy crunch, in my opinion, in Europe, and it's going to get worse. Of course, this is winter now. Demand usually increases, especially if it's a very cold winter. So that's why, in my opinion, the movement of carbon emission prices higher and to record highs is going to continue to increase demand for natural gas, because as you saw, coal and other types of fuels, fuel oil distillates, they require more carbon emissions permission. So that's why I think the price of natural gas is going to continue to remain strong, to go up higher. There is an agenda, in my opinion. The bankers, the financiers, they want people out of fossil fuels, but and into renewables, but it takes time to change. So as of now, companies, not just utilities, but we've learned in the last few months, and I touched upon this subject in September. I'm going to put another video up in the cards. We're seeing that natural gas is important for fertilizers and many other things. So I think the crunch is going to continue. And as you can see here, natural gas did make a 7-year high back towards the end of September, beginning of October at 6.5. And as I've said before, markets don't trade up or down in a straight line. They've corrected back to test the breakout here from the 2018 high, but now it looks like we're going to go back up. And I don't think there's going to be any let up in the carbon emission entitlement, the future there in carbon emissions. I noticed on Friday when all the commodities were getting hammered because of fears of another lockdown, when the stock market was dropping quite sharply, I noticed that natural gas was actually up, which I thought, well, I'm not surprised because I've been looking at this for a while. So there you go. I wish I had better news on the utility front for people in the UK and also in Europe. Yes, these markets are traded worldwide, so even if the US doesn't trade carbon emissions, natural gas prices in the US will be affected. And I think they will be even more affected in Europe. So with that, let's quickly look at where the markets are this morning. Yes, the stock markets have rebounded, but first let's look at gold and silver. It's 8:15 a.m. London time. We've got spot gold at $17.94. It's up just under $2. Range has been $17.75 to $17.97.50. So we're up slightly, but silver is doing well this morning. It's up almost 1%. And some people will say, well, silver dropped on Friday because it's more of a industrial metal. It's not really monetary. But when I made my video Friday morning, silver was actually unchanged, and then it was higher just after I finished it. It was only when the US came in that they started chipping away at silver to make it look like it's just an industrial metal. I would say the investment monetary aspect of silver is growing, and we just need to be patient, of course. So yeah, silver right now is up 21 cents at 23.33. The high's been 45. The low has been 23.00. The Dow future is up about 200 points. It's 35,100. I think, let's have a look here. On Friday, it closed at just around 34,900. So yeah, we're 200 points higher. The NASDAQ 100 futures is up 200. I think it dropped, let's see here. On Friday, it dropped 350. So it's gained about 2/3 of its losses. But I think it's early days. I'm not too sure these markets are going to stay elevated like this. I think they might go down when the US comes in, when official trading starts. But anyway, the same thing with the S&P. We're at 46.36. We closed at 45.94. So we're up about 40 points in the S&P futures. about 1% higher. The FTSE is up 1% at 71.15. Now to the currencies. We've got sterling down 0.1% at 133.24. The euro is actually down 0.5% this morning, 112.62. The dollar is unchanged versus the yen at 113.44. The dollar is down 0.2% versus the Chinese yuan at 638.44. Aussie dollar is up 1/3% at 71.42. The dollar is down 1/3% versus the Canadian dollar, 127.43. And the Kiwi dollar is up 0.1 at 68.26. So to the general commodities, yeah, crude oil got hammered, I guess, on Friday. It's back up a little bit here. It's up 2.75% at 71.42. It's up almost a couple of bucks. High-grade copper is up 1% at 4.34. The carbon emission futures that we spoke about earlier today, that's up just under 1% at 75.59. Natural gas futures actually are virtually unchanged, just above 5 at 506.80. With that, let's quickly look at the 10-year yields. We saw a big drop in yields on Friday because of all the the fear that they're putting into the public and the markets. But this morning, bond prices have gone down a bit. It's not surprising, seeing that money's flowing back into riskier assets. So the 10-year yield is up about 4 basis points at 1.53%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.